G'day, and welcome to Friday. Hope everyone's having a good start to the day. Or if you're already nighttime where you are, hope you had a good Friday. Let's get into the charts and have a look at a few things. So, I wanted to start with a couple of trades I took yesterday. Just to break them down for you guys, a bit of clarity on them, some learning hopefully. All right, let's start with a London trade I took on oil during yesterday's London session. So here we have a continuation breaker. Here's our breaker plus FVG. Price closes below the breaker and we get that displacement through. Now if we move out to the hourly, we'll just find that on the chart. There'll be questions about how did I come up with a higher time frame point of interest. So here we can see the trade in here. So what I actually did for this one is looking at this area through here, price pushed through and we have an inversion FVG plus a balanced price range. So for this trade in particular, I actually used this as my higher time frame point of interest. Now I know that's probably unorthodox, and this is just something that I've been testing, having a look at, something to add into my trade plan. My bias for the daily at the time was bearish, moving from internal to external was the idea. And price did move down quite some way before being brought back up. So at the time of taking this trade, I was bearish. So we had an inversion on the hourly that I used as my point of interest. We also swept this high, which created high resistance liquidity, and swept this high here as well. So I was anticipating a move lower. One thing that I didn't notice at the time until right this second was that we actually had a bullish breaker here. And we can see that price swept the lows. There's our stop hunt. Price came back up. Yes, it did reject, but when it came back through, it did it aggressively and with displacement. And then the hourly breaker has actually supported price. So this is our reversal breaker. I didn't notice that yesterday, so that's good to point out now. So back onto the trade. So we had an inversion on the hourly, and then my execution time frame is on the 5 minute. And what we had on the 5 minute as well is that we actually had a 5 minute inversion with a balanced price range, and this overlapped with the hourly. So that's why I was interested in this trade. We get our stop hunt into that level, that important level, our level of interest, and then we displace through. Now, what I did for this trade is price displays through, and I actually missed the setting my limit order. I was distracted doing other things, and when I came back to the chart, price had pushed back through here. So I decided that I actually liked the idea of taking the entry off the FVG inside the breaker, and what that also enabled was a reduced risk. So it reduced my stop, and it also meant I would have a TP at 2R that was sooner. So if we were to look at, if we had have taken the trade here, and we went for 2R, would we have got 2R? We would have eventually. We would have actually got there without being stopped, which is unreal. But it would have taken some time. So if your entry was here, which would have been, and you would have taken 2R down here, you're in that trade for 5 hours. We don't want to be in a trade for 5 hours. Well, I don't anyway. So in this instance, this trade was favorable in the sense that I reduced my risk by entering on the FVG. And you can do that. That's still a valid unicorn entry. And I was able to achieve 2R. So that was my London trade on CL. Let's jump over to NQ and have a look at the New York trade that I took. So we're on the 5 minute, was a 5 minute time frame from memory. Let me just double check that. Apologies, it was a 1 minute. Okay, so again, if we go to the hourly, I was bullish at the start of the day. Reason being, we're at all-time highs, but keeping in mind that we just had a continual push higher with strong momentum, so there was no signatures in price to tell me otherwise. At that time, we got CPI. CPI did the damage with this wick here, created high resistance liquidity, and then we had all this low resistance liquidity to target down here and down here. So once this candle here moved down, clearly that's displacement. This is our change in the state of delivery. So it was at this time that I said to myself, okay, it's time to reconsider my bias for the day, which I did. And then if we have a look at standard deviations, price max extension aligned with this low resistance liquidity down here. So price has actually reached that level. So I was liking the idea of the continuation of price lower. Now, there was no high time frame point of interest for the trade that I took. And I will find it. Okay, it's over here. Right. Now, the reason I didn't use a higher time frame point of interest is because I felt momentum was on our side, and we were going to seek out those lower prices, that low resistance liquidity. So the level that I took this continuation breaker on was around the -2 to -2.5 of the standard deviation. Okay, I'll just zoom that a little bit so you can see that. So you see that level, that's where the trade is. Okay. So at least I thought we were going to reach to the -2, or inside that -2 to 2.5 region. So with that in mind, I decided that I liked this setup. We had come back up into this this 1 minute FVG. We've found fair value here. And then at that point, we've retraced and we've closed through this breaker with displacement. So we've put our FVG in here. So that was the 1 minute entry I took. So if we run this high here, just to see where it lines up on the 15 minute, and you'll see that there was no point of interest there. I was just using the idea that we were, the idea of the momentum. So you can see here, that is that wick. It's not wicking into a fair value gap, it's creating the fair value gap. So there's no high time frame point of interest. So just to be clear, I did not use a high time frame point of interest. I just used the momentum in the market as my confluence to go, okay, I'm happy to take this trade. And it played out. And we could have got a lot more before the day was out. The market really sold off. It was due, to be fair, it was due. Okay, let's clear that up. Let's talk about today. We'll have a look at the calendar. There we go. So we have core PPI at 8:30. And then we also have consumer prelim UMO, consumer sentiment at 10 a.m. So with that news in mind, I would not be looking to take an entry or a position if one presents until after 10 a.m. I always do let news play out before seeking an entry. All right, let's go back to the chart. We'll check out what price is up to. See if we can get a read on it. Okay, so here we are on NQ. Internal. The price did close below, by the looks, or right on the bottom of that FVG. Looks like it did close just below that. Now, that being said, I would cautiously be looking for price to move higher. And I think we'll get a better idea as we move down the time frames on what market structure is doing. So we actually took out Monday's low. We're just about taken excuse me, Friday's low as well. So potential to take Friday's low and then continue up higher. Let's see what the hourly is doing. Because I also think, actually, let's have a quick look at ES, because I think we may have SMT at the lows. No, we do. Okay, so that's something to keep in mind, that we have a bullish SMT. Right, back over to NQ. Dropping down to the hourly. All right. So we have the SMT at the lows. SMT with a yes. We have had a sweep of the lows here, obviously, but we haven't got a change in the state of delivery just yet. If we do see a change in the state of delivery, I would be looking at this candle here. If price was to continue higher from here, that's what I'd be looking at to see the change in the state of delivery. The reason being is that this, if we look at it, is down, up, down. Okay, I consider this to be one leg. This whole leg here is one leg. It's fractal movements through there. Okay, so this is the leg that swept liquidity. So if we do get the change in the state of delivery, we have potential to reach back up into this region here. Okay, let's jump over to ES. So on the daily, ES had a slightly different structure to NQ. NQ had internal to reach for. ES does have internal, but it's not until this level down here, this Friday candle. We did close, we did wick below Wednesday's candle. We closed inside it. And we've also got this bullish SMT here. So we do have potential here for some upside. Let's drop down to the hourly. And that's that SMT with these lows. We're just consolidating here at the moment. If we get a nice displacement above this level, then we can consider moving higher. Let's have a look at the 15-minute for a second to see what London and Asia look like. So we had Asia low was swept. London low is still open, unmitigated. Asia high and London high have both been mitigated, so we'll keep an eye on this. Potential for a sweep lower and then continuation higher. We will see what 8:30 news brings. Let's have a look at oil. So oil is currently at this imbalance level. So with that in mind, it's a internal level. We do have internal here. We also have equal highs over here. It's essentially smooth edges when you consider these highs here, these highs. Yeah, okay. Actually feel like we might actually come back down, maybe retest this level, or fill this before we continue higher. Because this is definitely a good draw. But it's been a fairly strong move today so far. It's up over 1%. We've closed above this daily candle, closed above this daily candle and wick. We're at an internal level. I'm actually going to sit neutral on the daily for the time being. So our next move lower would be down towards here. We've got midweek reversal. If we want to look at a weekly profile, Monday, Tuesday, Wednesday low, Thursday, Friday. We may see these highs get taken. Keep an eye on it. Let's see what the hourly tells us. So we have, clear the chart for a second there. Bullish PD arrays being respected. We also have a bullish breaker. Which has also been respected, aligned with our PD array, our FEG, which is perfect. Sweep of the lows, displacement through. Okay, so we continue this momentum. We can probably at least see this high taken today. Let's see what So we've got Asia higher mitigated, London higher mitigated. The lows are mitigated on the looking at the 15-minute there. But I do like this structure. It looks like we've had the sell side on the buy side now. All right, Dixie. It's not really ideal when inversely correlated assets move in the same direction. When you've got NQ, ES, and Dixie moving in the same direction, you really want to see Dixie doing the opposite to ES and NQ. That wasn't the case yesterday. We did have a little volume imbalance here that price actually came up into. You can see that there. And then we've sold off from there. I'd anticipate to see this low. So I'm going to say bearish for today on Dixie. Let's go to the hourly. Price respecting bearish PDRA. Breaker. Bearish breaker, continuation breaker. Displaces through, retests. Stop hunt above these highs. So we're definitely bearish at the moment. So I anticipate that to continue today. Okay, let's have a look at gold. So gold, we actually reached our target yesterday. Our bias was correct and we met our objective. Both these levels were swept. So we can now anticipate price to move lower, which it is. We have this internal liquidity resting here. Yes, it's not closed yet or confirmed as internal yet. However, there is liquidity resting here with all this buy side imbalance. So price seeking to move lower here makes sense. So bearish for gold. Okay, let's have a look at the hourly. So we've got our rejection block here. Price was unable to get back to equilibrium there on 2 attempts. So I like that for a move lower. There's no displacement here. So not an aggressive move lower, but this would be the change in the state of delivery. Again, I would like to see displacement, which we just don't have. Can't see any displacement there. That would be a change in the state of delivery. We've got some lovely low resistance liquidity down here. And we have FVG that can offer some fair value down here as well. So we'll keep an eye on gold. For now, it's looking nice to go short. We may get our FVG in here to give us that displacement we're seeking for our change in the state of delivery, so we'll keep an eye on that. All right. Should I just do one FX? Because I don't really do them very often, but let's have a look. Let's have a look at Euro. So Euro, we swept. External here, we also swept external here. And very close to those highs, didn't it? And that would be low resistance liquidity here. High resistance liquidity down here. We have a sweep of this low. That's what we want. We want high resistance liquidity on our side of price, a low resistance liquidity on the other side of price. I think we might actually see, now we've already swept these external levels. We had a solid close here. We did have some wick to the downside, but certainly some momentum in today's price action by the looks of that. So I think we might actually see these highs taken today. Let's have a look at the hourly. It's curling up. Again, bullish PD array respected. Supporting price. That's what we like to see. And it's done it multiple times. Multiple times. So I definitely think we could see those highs swept. And then we could possibly look at changing our bias if we get some signatures in price to tell us that. Alright guys, I'm going to wrap it up there. I hope you all have a good New York session. Enjoy your Friday and enjoy your weekend. I'm looking forward to today's session and looking forward to the weekend. So we will catch you next week. Please like and subscribe. Don't forget, if you use code Jimmy for My Funded Futures, you get max discount on their brand new starter evals. Apex also have a mega sale, 80% off at the moment. If you use code Jimmy, you will get max discount on that too. So grab those evals and get trading. Thanks guys, catch ya.